Welcome back. Let's take a quick look at how the markets are faring now. And Hong Kong stocks fell this morning, posting their biggest single-day drop in more than 3 months amid worries over the latest developments of month-long protests and renewed uncertainty around the potential China-US trade deal. Now, US President Donald Trump said on Saturday that trade talks with China were moving along very nicely, but that the United States would only make a deal with Beijing if it was the right deal for America. Now, China's producer prices also fell the most in more than 3 years in the month of October, while consumer prices rose at their fastest pace in almost 8 years. Overall, though, China's stocks fell, with the Shanghai index falling the most in more than 4 months. So the Hang Seng in Hong Kong led all those losses this morning, as that index then fell 2.6% to 26,926 points. The Shanghai Composite there, sitting below 3,000 points, did drop 1.8% there. Its worst session since July the 8th. And the Nikkei in Japan was about 0.25% down this morning, and that sits at 23,331 points. Let's head on over to the United States now, where the three major stock indices posted record closing highs, and the S&P 500 registered what was a fifth straight week of gains on Friday. This as investors brushed aside the worries over progress of trade talks between the United States and China, and as Walt Disney's shares rose. Doubts about trade progress resurfaced early in the day when President Donald Trump, said he has not agreed to a rollback in U.S. tariffs, which sought by China. The Dow Jones Industrial Average a little higher there, sitting at 3,093 points for the S&P 500. The Nasdaq Composite 0.5% better off, 8,475 points. Let's take a quick look at how other markets are then faring as well, particularly out in Europe. It's a red day as well across the board. There seems to be some rest or respite, shall we say, as well across the European market, following through then from that Asian trade as well, as things seem to be headed a little bit lower. A breather as well for the general market sentiment, so that filtering through into this market trade. On the local front then, take a look at the JSE All Share. Well, it ended last week on a high note, certainly getting a good trade across that week. But today then, if we take a look at how the JSE's fared, well, still sitting low and just below that 56,000 point mark as well then for the All Share. So some negativity as well filtering through there for the time being, the industrials and financials following suit. But it is a good day for the gold shares, so those seem to be higher. So some trading that has gone through into those gold counters. Of course, let's remember that with the risk-off trading, you'll find that gold becomes the safe avenue for most investors, but resources overall headed lower. Quick look then at how the markets are faring in terms of your commodities. Well, the gold price below that 1,500 mark, but steadily heading higher. Platinum, however, not such a good day there. $881 for platinum. It's $61.65 a barrel for Brent crude. Perhaps a little bit of instability, questions around demand as well with regards to that one. And a quick look at your currencies. $14.88 then for a US dollar. Slight weakness there. $19.07 for a pound and $16.42 for a euro. Let's head on straight then, of course, to some other currencies as well. The real in Brazil, a little bit better off, so too the yuan, rupee and ruble in Russia as well. All right, so what has certainly been interesting is just how much consumers spend. Now, we've spoken a lot about how global economies are headed a little bit lower, but it doesn't necessarily mean that consumers are spending any less. And this is evidenced by what is actually the largest and biggest shopping day of the year. No, ladies and gentlemen, it is not Black Friday. It is a day called Singles Day. And Singles Day was initially marked up by Alibaba, the company, of course, that was formerly headed up by Jack Ma, but certainly started by him, and certainly aimed at commemorating and indeed celebrating being single. And how best to do that than to go shopping. So this is how much that holiday has made. It's become an absolute sensation across the board when it comes to selling, the biggest shopping day in the world. $1 billion worth of revenue made in 68 seconds, 10 billion being made then as well in that time being. So as you can see, certainly the numbers were certainly quite astronomical, and certainly coming up with a whole host of data in the meantime there. Indeed, as you can know, 23 billion dollars, should I say, 9 hours, 27 billion in 12, 544,000 orders every single second. One day brought about more than $30 billion in terms of shopping there, and that was before the close of those orders. It's a 25% uptick in sales compared to last year, a little lower than perhaps some analysts would have expected, but certainly some amazing numbers there coming out of Singles Day. Now, as I said, it is the biggest shopping day, of course, across the globe, but certainly there are some big ones. So as of 2018, the shopping day there by Alibaba, that Singles Day, brought in $30.8 billion. And then we saw the JD.com day bring, which is called 618, of course, their anniversary, bring about 25 billion US dollars in the meantime. The third largest shopping day of the year across the globe is actually Cyber Monday, which brought in 7.9 billion US dollars last year, 6.2 billion for Black Friday. Well, we can certainly tell that things are heating up when it comes to the shopping sphere, but here's one. We've resuscitated the bus and brought it back to life, Craig.
So welcome back to the Springbok Victory Parade. We had a temporary problem. The bus, well, one of the buses broke down, but I think it wasn't the bus with the Springboks. Actually, it was there's one where there's all the family members on, but that's all been sorted out, and you can just see what great scenes and celebration there was in the center of Cape Town. Our cars are just all stopping on either side of the highway just to have a sight of their heroes, the Springboks. We're on our way to Langa. We're on the N2. Just about there's a left turn that will take you onto towards Paarl. Lost the line. Lost the call.
Just a few technical difficulties, of course, then as we get those visuals. As you can tell, Craig Murray really telling us as well that they are off to Langa, so the bus up and moving again then. The Springboks indeed are champions. A resounding welcome and a resounding word of thanks then, and celebratory mood across Cape Town in what is the final leg of that victory tour then by the Springboks. We'll continue to give you the latest on that as well, of course, throughout the day and indeed throughout our bulletins as well. Let's head on over now to the market picture. And as I noted a little bit earlier, some weakness certainly coming through. This time, Gary Boyson joins us from the Johannesburg Stock Exchange. Not in Cape Town, Gary, so you can't necessarily celebrate anymore. But one thing we also can't celebrate, unfortunately, is the market going down today.
Oh, certainly the market's looking a little bit rocky while we're getting still lovely visuals of that World Cup tour. But yeah, the markets have been exceptionally strong overseas. So we've seen the S&P 500 and the Dow Jones making record highs recently, and it is, you know, it seems like it is time that we got a little bit of a pullback. Now, the pullback is really based on two factors, and I think both of them are stemming around Hong Kong and China. So the first is obviously, as you mentioned in the headlines, the continued unrest in Hong Kong certainly has helped to pull at least the Asian markets lower. We've had reports that protesters have now been killed in that action, and the spotlight is firmly shifting back to those at least the pro-democracy protests. Now, the other kind of Chinese-centric news is the news of the weekend that Donald Trump is saying that they potentially might not roll back tariffs. If you look at what's happened recently, we are starting to get the phase one of the deal, or at least the markets were expecting that to go through. Now, that would mean that China would increase its import of U.S. agricultural products, and in response to that, the U.S. would consider phasing out some of the tariffs they had announced in September. Donald Trump obviously saying that nothing nothing has been agreed so far. It took the market a little bit by surprise, and we're seeing at least the overseas indices falling on the back of that as risk off trade at least starts to dominate. We've also got US Veterans Day today, so we've got the US equity markets open, but we've also got the US bond markets being closed. That also closes certain currency markets. So you are going to see a lighter volume day, and that will result in probably more exaggerated moves, especially in currencies compared to usual.
Taking in all of that, we still have the really great days I made note of a little bit earlier. Singles Day. Do you partake, Gary?
Singles Day. So Singles Day based on it's the 11th of the 11th, so 11th of November, and it's really a Chinese holiday, and it's where you see mass discounting at the likes of Alibaba. Now I saw you had all the visuals up for viewers earlier, just explaining how big this day is. But the idea of having $31 billion in sales, I mean, just to put that in context, that's about 10% of South Africa's annual GDP that has been traded today in Alibaba products, which is absolutely incredible. Now, I haven't actually bought anything. I'm still waiting for Cyber Monday and Black Friday later in the month. But certainly, it's an enormous, I suppose, almost a capitalist festival, if you will, in China, and it really extends into the rest of the world. I saw the likes of iPhones discounted. I saw things like Ugandan mangoes on special as well. So it's a broad-reaching, I suppose, event, and certainly it's going to give us a decent sense of what the global consumer is looking like.
It's absolutely crazy that a festival like that would tell you what consumers think when it's perhaps rash and just, a spur of the moment sort of sentiment, right? But all of these days really do tell you whether consumers are headed up into a better sense or not. Last year, sales rose 27%, and that was the worst in 10 years. This year, it looks like we may be up in and around 25%, and that'll be the worst since the start of Singles Day as well. It's still an absolutely incredible number, but still shows a massive slowdown in that economy.
No, certainly, and analysts at the moment are very concerned, especially around Chinese growth dipping below potentially 6%. Now, if you look at it, the key words there, it's the sales figure, and no one really knows, what kind of discounting goes on, from a company perspective. So, you can look at the overall revenue line, and you can say, yes, this is certainly going to, give us a sense of how willing consumers are to spend. But looking at the likes of Alibaba's share price, which, and I'm sure Alibaba wants this to be a very, very successful festival because they are planning on listing in Hong Kong shortly. But really, without knowing the extent of the discounting this year, you don't know how much of this top line, the sales revenue, is going to drop down to the bottom line and actually result in profit for the company.
Yeah. Look, we could even touch on Saudi Aramco as well, right? That's going to be an absolutely massive IPO, but I wanted to bring it locally. Vodacom coming out with interim earnings on that front. I did get to chat to the CEO. Things aren't necessarily going up in leaps and bounds, and again, showing the sights of the local economy slowing down.
I think to an extent this is the local economy slowing down, but it's also a changing industry as well. So if you look at, I suppose, the telco space, what's happening is you're getting to a point where Vodacom, which is primarily a Southern African and South African operator, is operating a very saturated market, and more these companies become like utilities. So while you're seeing, big increases in actual pure data volumes, you're not seeing that come through in revenue. So you're seeing fairly flat revenue numbers, and that really is just a result of a more developed and more established market as consumers demand, I suppose, lower prices of data, and the competition really heats up. If you look at the actual consumer acquisition numbers, Vodacom is at least going in the right direction, but it is a very, very competitive market. It's a very well established market. So the kind of growth that you see in more emerging types of technologies is no longer being captured by Vodacom, which is clearly reflected in these numbers.
Yeah. Gary, appreciate the time, but thank you so much. Live from the Johannesburg Stock Exchange, Gary Boyson from Rand Swiss there, joining us to help us unpack that market movement a whole lot more.